Welcome to the channel Big Thing Journey. My name is Mane and today I'm starting a new format in which I will be discussing with you some interesting reports. Some reports that I have read during the weekend and I literally found very insightful data that I wanted to share with that could help you maybe in investing, or maybe if you are from that industry it could help you start something of your own. Today we will be discussing a report by Avendus. So without doing a further ado, let me share my screen and let's get started. Okay, so today's report is about how single specialty hospitals are carving their own path in Indian healthcare services sector. So just to give you a brief background, in the past decade we have seen rise of multi-speciality hospitals. These are massive hospitals, something like Max Healthcare, Fortis, or maybe Medanta. These hospitals serve wide range of specialties like IVF, eye care, mother and child, dialysis, oncology, and the list goes on. But in recent times, we have seen a new trend in which these single specialty hospitals are gaining traction. These hospitals might not be able to serve you all kind of facilities, but they are super specialized in what they do. So just to give you an example, there's a Sharpside center near my home, and they operate an entire building just providing all the services related to eye. It is a eye hospital. Coming back to the report, let's start with the overview of the Indian healthcare services sector. So the hospitals are a $130 billion industry in India, out of which 67% is controlled by private hospitals and trusts. If you see the middle section, the healthcare delivery market, it is growing by 10% CAGR, which is not a small number. So one of the factors for such high growth rate is rise of lifestyle diseases. You all must have noticed that we have started to eat out much more than we used to do, and after that we sit in our offices for very long. There's very less physical activity. We majority of us rarely work out. So that's one of the biggest reasons. Then the second reason could be affordability and accessibility. As the disposable income of people increase, the hospital becomes accessible to much more people, and they actually go to the hospital and get themselves diagnosed rather than just avoiding the surgery just because they couldn't access it. Another factor is the medical tourism, which is again a sector that is growing rapidly. A lot of people from developed countries prefer to come to India and get themselves treated because the cost of healthcare in developed countries is again skyrocketing. So just the dollar arbitrage gives them an opportunity to come to India. And so what is expensive in USA might be very cheap in India for someone who's living in USA. Coming to the next point, India spends around 3.3% of its GDP on healthcare, which is way less than the world average, which is around 11%. So there's a massive scope for improvement. So in this slide, you can see that a single specialty hospitals cover like eye care, mother and child, IVF, oncology, skin care and hair, dialysis, urology, nephrology, dental, and there are several other specialties that these hospitals can provide. Overall, the market is growing at 12% CAGR, but single specialty in itself is growing by 20%, and organized single specialty is growing at a 24% CAGR, which is like a massive growth that we can see in this industry. So this slide shows how hospitals have created a significant value for shareholders over the last decade. Over the last decade, Nifty has delivered a CAGR of around 11%, while pharma, which has massively underperformed, has just given a 5% CAGR. Hospitals have beaten the Nifty, giving you an alpha of around 3%. If you see on the right, overall the hospital sector is being re-rated because overall the EBITDA margins are improving. Median pre-tax return on capital employed has increased. So again, I just wanted to share with you some examples of like some listed players. If you see this screen, like Max Healthcare, Apollo Hospital, Fortis Health, Narayana Hrudayalaya, I will just share some example later on. There's a very interesting case study on this hospital. But if you see the P ratio here, so all these are trailing on a very high P ratio. Max Healthcare is trailing on 104, Apollo Hospitals is trailing on 71, Fortis is trailing on 68. So that means that the investors are willing to pay a premium because they see a massive growth in this industry. Coming back to the report, so let's understand why some specialty hospitals break out from the multi-specialty setups which have worked for more than over a decade and have been so successful in tier 1 cities. Okay, so the reasons can be divided into two segments, which is like one is demand side factors, one is supply side factors. Okay, so the supply side factors include targeted innovations and specific equipments. Single specialty hospitals cater to you from A to Z for the specialty that they are providing, they will have all the equipments, they can do R&D around that. But for multi-specialty hospitals, they need to cover a wide range of specialties. Because of that, they might lose out on some aspects of some specialty. So that is the one reason. Then brand equity. So just as I shared an example earlier of Sharpside Center, there's a massive brand equity that you can build. So every time I have a eye problem, I'll probably just go to that center. And the third is optimized unit economics. Okay, so to understand this point, you can go to YouTube and watch this video. It's by Think School, and it says this Indian makes 400 crores by doing free heart surgeries. It's around Narayana Hrudyalaya. So they have mastered the operations around heart surgeries and streamlined it so much that they are able to make it very much affordable. So affordable that even a middle class person can afford to have heart surgeries. And they have a charitable wing also that you will be able to understand in this video very easily. So the concept is the person who's making less money is charged less by the hospital, while someone who's making more money is comparatively charged higher. So that's the overall concept, but you will be able to understand that much more detail if you see this video. Coming back to the report, the next point is scalability. And as I have mentioned earlier in the video, it's not that capital intensive to start a single specialty hospital, because of which it makes it easier to scale. And not only scale it in tier 1 cities, but scale it to tier 2 and tier 3 cities. Coming to the demand side factors, doctor focus and clinical expertise is something I would actually look for. Risk of cross infection is again one of the major reasons that people actually go for. If I just want to get my eyes checked, I don't want to go to a hospital which has a lot of uh, different patients having different problems. Affordability is another factor, proximity to patients, because these are not big hospitals. You can actually have multiple smaller single specialty hospitals, which makes it easy for customers to visit you, rather than having like 4 or 5 massive hospitals which are like far from patients. So this slide just shows that how some specialties have high propensity to break out from the multi-specialty setup. So if you see here, there are some specialties that have demonstrated successful single specialty models, which include dental, skin and hair, eye care, dialysis, IVF, ENT, and mental health. Whereas there are some specialties that would actually work better in a hybrid setup or largely remain under the multi-specialty fold. The examples include mother and child, oncology, urology, nephrology. So in the next segment, we'll be talking about how single specialty hospitals are driving large outcomes. And because of these reasons, there's a move towards single specialty hospitals away from the multi specialty hospitals. Okay, so starting with the total addressable markets of these individual specialties, 17. So almost all these specialties are having a double digit growth rate. And these high growth rates can actually make it easy to create a 1,000 crore brand. So the next slide talks about the attractive unit economics of the single specialty hospitals. First, it talks about the capex. If you see, it's not that capital intensive. In 4 crores, you can easily start a IVF center. Mother and child may is kind of expensive, along with oncology taking 25 and 35 crores. But mostly you can start these on an average around 5 under 5 crores. You can start a single specialty hospital. Talking about the EBITDA margin, all these single specialty hospitals operate on more than 20% EBITDA margins, which is again very high. So if you check out the skin and hair care segment, the EBITDA margins are of around 40%, highest of all of them. But there's something really interesting happening in the IVF segment. If you see the typical mature ROC, it's around 100%. 100% of ROC. That's next level. This slide talks about how the business model of these single specialty hospitals revolves around brand building and mergers and acquisitions. You can have a quick look around this. One of the key takeaways here was that most of these single specialty hospitals break even in 2 years. So, because of this, there's a lot of interest shown from investors. So, if you see this slide, the investor interest in the entire healthcare sector is continuously growing starting 2015. But from 2015 to around 2022, it was largely driven by multi specialty hospitals. Only around like post 2020s, that we have seen a trend in which the share of single specialty hospital has been rising, if you see here on the graph. Coming to the last segment of the report, established specialties, it deep dives into each specialty individually. Like it will talk about IVF individually, dialysis individually. So I think if someone is interested in studying all these uh, individual specialities in detail, they should actually check out the report. I'll actually link the report in the description sector. But something that I wanted to discuss here, I'll not complete the entire report because it's a 128-page report, but I'll cover a few slides that have moved forward. So let's just cover those quickly. Okay, so coming to the fertility market, around 55% of this market is actually organized. There are already a lot of players in this organized sector, out of which 35% of this market is controlled just by Indira. So again, this is fairly developed segment. Coming to the eye care market, only 15% of the market is controlled by the organized chains, while 65% of the market still depends on private clinic. So this creates a massive opportunity for some regional brands to actually scale up and enter this organized chains market. So the interesting part starts from the mother and child care segment, where only 3 to 5% of the market is actually controlled by the organized chains, while around 97% of the market is actually driven by local nursing homes or multi-speciality hospitals. So again, here's a massive opportunity for smaller brands to actually scale up and enter this. Again, coming to the dialysis market change, almost 50% of the market is actually controlled by multi-speciality hospitals. In the organized sector, there are not a lot of players. There are very few players that are shown in this diagram, out of which around 43% is just controlled by one player. So this creates opportunity for many smaller players to enter this organized space. Again, coming to the oncology market, there are not a lot of players in this space, and HCG Hospital itself controls around 50% of the CCC chains. Dental care services again provide a massive opportunities, as only 2 to 3% of this market is controlled by organized chains, and out of which Clove is a market leader. One of the most interesting segments is the medico aesthetic services market, because there are literally no brands above 500 crores. Only 8% of this market is controlled by organized players. So again, this creates a massive gap in which many players. Okay, so this was my take and discussion on the Avendus report on single speciality hospitals. So do let me know in the comment section what you liked, what you did not like, or if there's anything that I can improve on to make this discussion more insightful. So we'll incorporate that in the future videos. Thank you for watching. Do subscribe the video, and I'll be back with another or some other interesting video very soon. Thanks for watching.